Hello students, hope you all are well. Let us start our next video on the basis of elements of accounts standard 11th part 1. Before starting this video, just 1 minute I want to revise till now what I taught you till the last video. The second chapter, the dual effect of accounts is going on. In this second chapter you might have seen which way your textbook explain. I did not explain in that way. In my own method, step wise I explain. Still the last video I explained you the 6 steps. Step 1, step 2, step 3, step 4, step 5 and last is 6 steps. All these 6 steps, the step 1 it was how to find out the cash transaction and credit transactions. Step 2, how to find out the two effect or the dual effect of the accounts. Step 3, the classifications of accounts, that is personal, real and nominal. Step 4, the rules of debit credit. Out of these two effect, one will be the debit effect, another will be the credit effect. And step 5, regions of debit credit, that is called rules of debit credit. And the last step, it was the amount of these transactions. Page number 46, according to your textbook of illustration 11, you are having the total 20 transactions. These 20 transactions, the answer it was given in the next page, page number 47 in your textbook, but which way your textbook explain, I also explain in the same thing, the answer will cover, but which way I taught you, that way I want to explain so that it will be easy for you to understand. Once you are understanding all the 6 steps, then next chapter, chapter 3 and chapter 4, there is journal entry. Whenever it will come, it will be easy for you to understand. So let us see which way I explain the all 6 steps, that way you follow it. Illustration 11, page number 46. To which account the following transactions will be debited and credited in the books of Amrut? Describe it. Though it is said which account it is debited and credited, but I will complete all these 6 steps from all these transactions. Number 1, commence business with introduction's capital of rupees 40,000. Who commence? The Amrut. You think that you are the Amrut and you started the business by introductions of the capital of rupees 40,000. Everywhere you will not find out the way which I told you to find out whether it is a cash transaction or it is a credit transactions. The formula what I told you will not get. See, neither it is given for cash, in cash, by check, nowhere it is given paid or received, nowhere it is given on credit, nowhere it is given party's name. Even though by seeing these transactions you have to take decision whether it is a cash transaction or it is a credit transactions. One thing you keep in mind, you will read the transactions and after reading the transactions you will take one decision due to this transaction, whether is there any change of your cash balance or bank balance. Bank balance means bank account, whether it is increase or decrease. सबसे बेस्ट है, that is the main thing, how you will identify whether it is a cash transaction or a credit transactions. Due to these transactions on the spot or the same day, on the spot when transaction taken place, due to that your cash balance or the cash box, the balance is changing. Changing means either it is increasing the balance or it is decreasing the balance, or in the bank balance, whether your bank balance is increased or decreased. If it is change either in the bank balance or in the cash balance, then that is called cash transactions. This formula you will keep in mind. Here you will think about your business. So you have given money to the business 40,000. So before getting this money, the business cash box balance it was 0. Now due to this transaction your cash box balance became 40,000. So Due to these transactions, your cash box balance is changed. So it is called a cash transactions. So you will write it as a cash transactions and two effect. One is cash account, another is Mr. Amrut's capital account. One is cash account and this is Mr. Amrut's capital account. Now cash account debit comes in and Amrut's capital cash account debit, it is a real and it is real debit comes in. Real debit comes in and capital account it is personal account credit the giver. Amount is 40,000. Every time I will not say the amount last step already you know it is 40,000. Loan obtained 60,000 from Ramnik. Loan obtained means you have taken, Amrit has taken, because 40,000 amount was not the enough. So for that he has taken the loan which is 60,000 from Ramnik. When he has taken a loan, that means again your cash box balance was changed. Beginning before transaction 1 it was 0. Now after transaction 1 it became 40. Now after transaction 2 it became 1 lakh because 40 plus 60 is equal to 1 lakh. So loan obtained means you have taken a loan of rupees 60,000 from Ramnik. It is a cash transaction. Cash comes in. So one is cash account and is Ramnik loans account. Cash account debit, what comes in? Real account debit comes in and cash account is real account debit comes in and loan account, Ramnik's loan account, that is personal account, credit the giver. Amount is 60,000. Now number 3, which way I told you that already I explained, like that purchase goods of rupees 5,000 from Mr. X. Previous day which I explained. Purchase goods of rupees 5,000 from Mr. X. Credit transactions. A effect goods account, B effect Mr. X account. Like that way I will say goods account real debit comes in. Goods account real debit comes in. That means 1, 2, 3, 4, 5. All 5 steps together I will say. Amount I will not say. Amount it will be given in the question and that amount will write. Similarly second step Mr. X account personal credit giver. Like that suppose paid salary of rupees 5,000. I will say first step cash transactions. Then cash account and salary account or salary account and cash account. Salary account nominal debit expense. Cash account real credit goes out. Like that way. So what we will do? Paid salary of rupees 5,000. First we will write cash transaction. Then we will write salary account and cash account. Then again we will say salary account nominal debit expense. Cash account real credit goes out. Like that way I am explaining it here. Number 3, rupees 20,000 deposited with Union Bank and open account. Now out of this 1 lakh, you 20,000 deposited into the bank to open an account. Again it is a cash transactions because bank balance is changing. At the same time cash balance also it is changing. So cash transaction, the two account one comes. One is Union Bank account and is the cash account. One is Union Bank account and is the cash account. Now Union Bank account is the personal account, credit the cash goes out and cash debit Union Bank credit. So who has taken the money? Union Bank has taken the money. Debit the receiver, credit the giver. So 20,000 deposited with the bank of Union Bank and open an account. The two account you are getting, one is Union Bank account and this is cash account. The Union Bank is the debit receiver and cash goes out. So credit. So Union Bank is the personal debit receiver. Union Bank is the personal debit receiver and cash account is the real credit goes out. Real credit goes out. Amount is 20,000. Brokerage received of rupees 4,000. How much you have received brokerage? 4,000. Brokerage received 4,000. It is a cash transactions. And the two account you are getting, one is brokerage account and is the cash account. Brokerage is your income. Cash real account goes out. Sorry, received. Cash is cash you are receiving. Yes. Cash account debit. Why? Because real it comes in. Cash account real debit comes in. Brokerage account, nominal credit income. Nominal credit income. Next is coming goods of rupees 10,000 purchased on credit from Bachu Bhai. This is a credit transactions because person's name is given. And if it is a credit transaction, then anywhere cash account will not come out of the to account. The goods of rupees 10,000 purchased on credit from Bachu Bhai. This is a credit transactions. The two accounts comes. One is goods account and the is Bachu Bhai account. Goods account and Bachu Bhai account. Goods account real debit comes in. Goods account real, that is debit, comes in. Bachu Bhai account personal credit giver. Debit the receiver, credit the giver, because he has given the goods. That will keep it in mind. Clear to you? Once again I want to tell you, goods of rupees 10,000 purchased on credit from Bachu Bhai. One is goods account and is the Bachu Bhai account. Goods real and Bachu Bhai personal. Goods real debit comes in Bachu Bhai personal account, then it is credit the giver. Goods of rupees 20,000 sold on credit to Lakshmi Bhai. This is purchase, this is sell. Credit transactions because you sold goods to Lakshmi. And goods account and Lakshmi account. Goods is real, Lakshmi is personal. Goods goes out. Here use goods goes out. Here goods comes in. Fifth one is comes in, but sixth one is goes out. Goes out होगा तो credit goes out, and Lakshmi is the debit the receiver, personal account, like that. Number 7, shop rent paid. Shop rent paid it is a cash transactions, and the two account, one is coming, that is shop rent account, another is cash account. See, one is shop rent account and cash account, and shop rent is the nominal account, expense debit. Shop rent account, nominal account, expense debit. Cash account, real account, credit goes out. Cash account, real account, credit goes out. Number 8, rupees 200 paid to Ramkant for carriage. आपका you may have the doubt whether it is a credit transaction or cash transactions, because once the word paid is given, so it will be considered as a cash transactions. Though the name is given Ramakant, so Ramakant name is given even though it is a cash transaction, because paid, and due to these transactions your cash balance was changed. This is what for you paid for carriage. So two account is coming. It is a cash transaction. One is carriage account and it is cash account. One is carriage account and it is cash account. Carriage nominal account and it is a debit expense. Nominal account debit expense, and cash account real account credit goes out. Cash account real account credit goes out. Number 9 you are getting 500 became receivable for interest from Kundan. 500 became receivable for interest from Kundan. Now 9th transactions you have to understand. 500 became receivable for interest from Kundan. So these transactions, it has been already taken in the business or not? Yes, because this is a transactions which means is you are going to get 500 from Kundan. What for? For interest. Receivables means you are going to receive, but still you have not received. Now you think this you have received this money, you have not received the money. It is receivable. Receivable means that it is a credit transactions. The transactions, due to these transactions your cash balance and bank balance has not changed. And the two account is coming. One is interest receivable account and this Kundan account. The two account is coming. One is interest receivable account and this Kundan account. And interest receivable and Kundan both are personal account. Keep it in mind. Interest receivable and Kundan both are personal account. Now interest receivable also personal account and Kundan also it is a personal account. And interest receivable, you are going to get the interest, so it is assets. And if it is assets, it is debit, and Kundan is the credit. So personal account, so debit the receiver, credit the giver. So keep in mind, it is not a cash transactions, it is a credit transactions. Number 10, salary paid to Dinesh. Salary paid to Dinesh, cash transaction, paid is given. As paid is given, it will be considered as a cash transaction. And two account, one is salary account and cash account. Salary account debit expense, cash account credit goes out. Salary account debit expense and cash account credit goes out. Number 11, commission received of rupees 3000. Commission received of rupees 3000, cash transactions. One is commission account and this cash account. One is commission account and this cash account. Cash debit, real debit comes in. Cash, real debit comes in, and commissions is the nominal credit income. Nominal credit income. That is 11. 12. Goods of rupees 15,000 purchased on cash. Very easy transactions. Cash transaction. One is goods account and this cash account. Goods account and cash account both are real. Goods account real debit comes in. Cash account real credit goes out. 13. Goods of rupees 20,000 sold for cash, just reverse of 12. This is also, one is goods account and this cash account. Goods goes out and cash comes in. So cash debit, goods credit. Both are real. And debit means you know what comes in, credit means you know what goes out. Vehicle purchase of rupees 10,000, cash transactions. One is vehicles account and this cash account. One is vehicles account and this cash account. Vehicles debit, cash credit. Why? Because both are real account. One comes in and cash goes out. Vehicles comes in and cash goes out. Number 15, furniture of rupees 2000 purchased from Raj Furniture Mart. This is a credit transactions. One is Raj Furniture Mart and this is furniture. The two account is coming. One is furniture account and this is Raj Furniture account. One is goods account will not come here. Keep in mind. One is furniture account and this is Raj Furniture Smart account. Furniture is the real account and Raj Furniture Mart is the personal account. So furniture real debit comes in. Raj Furniture is the personal credit and giver. Number 16, Lakshmi returned the goods of rupees 400. See, why Lakshmi returned the goods? Because you sold the goods to Lakshmi on 6th transaction. 6th transaction you sold the goods to Lakshmi. How much? That you sold goods 20,000. Out of that 400 goods you are going to get back. Why? As it was not according to the order it may be. So this is a credit transactions and two accounts is coming. One is Lakshmi account and there is sales return account. Or goods, you can write goods also for temporary, but this is a sales return account. One is Lakshmi account and this is the sales return account. Lakshmi is the personal giver, credit, and sales return is the debit. You are going to get back. Goods is coming. Sales return means goods actually. So goods is debit, Lakshmi is credit. Similarly, the goods of rupees 500 returned to Bachubai. We have given back goods to Bachubai. One is purchase return account and there is Bachubai account. One is purchase return account and there is Bachubai account. Bachubai is the personal account and purchase return is the real account. And there we are giving back. So goods is going. Going means goods credit. Bachubai is getting. So Bachubai is debit. This is 18. Withdrawn 200 from Union Bank. Cash is coming from bank. You are getting back amount from the, you are taking money from your bank. The two account, one is Union Bank account and this cash account. Cash is coming. That is coming means debit. Cash real, debit comes in. Union Bank personal credit giver. 19. 300 paid for postage. Cash transaction. One is postage account and this cash account. Postage is nominal, cash is real. Nominal expense debit and cash real credit. Cash real credit goes out. And 200 paid for advertisement. This is also same like the 19. you have given 200 for advertisement. Cash transaction, one is advertisement expense account and is cash account. Advertisement expense nominal debit expense, nominal debit expense, cash real credit goes out. Like that way what I explained the illustration 11 or page number 46, not like that in your book. You read this page also, but which way I taught you, that way if you go through, it will be good for you and you will be able to understand. Page number 49, exercise 2, the illustration, question number 1, MCQ all, you will write it in your pair book. Question number 2, 1 or 2 line question answer according to your paper style. Question number 2 is 1 or 2 line question answer, that also you will write in your fair book. Question number 3, answer in 2 or 3 sentence, that may come the 2 marks or 3 marks, that also you will write in your fair book. Question number 4, already I explained previously, to which account the following transactions will be debited and credited in the books of Nilima, described with the reasons. That's just now what I told, like that way. Even though the illustration page number 50 of question number 4 and page number 50 of question number 5. Question number 5, just now illustration 11 what I said, it is like that, the question number 5 of illustration like 11, and this is 4. I want to explain which way you will write the answer in your pair book. Though it is given to which account the following transactions will be debited and credited, but you will write all the 6 steps which way I explained in illustration 11, or like that way which I told you, like that way. First you will write the question, then by putting the arrow you will write whether it is a cash transaction or credit transactions. After that, first step, second steps, twofold, 2 accounts, then classifications of accounts, personal, real, nominal, then debit, credit, then reasons, then amount. Like that way you will write this answer. 1 or 2 I am showing it here. Rupees 50,000 brought into the business in cash to started the business. 50,000 brought in cash and started the business. So these are cash transactions. One is cash account and there is capital account. One is cash account and there is Nilima's capital account. Cash account, real debit comes in. Cash account, real debit comes in. And Nilima's capital account is the personal account, credit giver. A loan of rupees 10,000 taken from Jaslyn. Cash transactions. One is the cash account and there is Jaslyn's loan account. Cash transaction. One is cash account and there is Jaslyn's loan account. So cash account debit, real debit comes in. Cash account, real debit comes in. And Jasmine's loan account is the personal credit giver. Personal credit giver. Amount 10,000, 10,000. Bank account opened by depositing rupees 30,000. Cash account and bank account. Cash transaction. Cash transaction. One is cash account and there is bank account. This cash account, bank account open, cash goes out. Cash goes out. So cash real goes out credit. Cash real goes out credit, and bank account personal debit the receiver. Debit the receiver. A computer purchase for rupees 8,000. Computer account and cash account. It is a cash transactions. A computer purchase for rupees 8,000. Cash transactions, and the 2 account is coming. One is computer account, not goods. One is computer account and there is cash account. And computer and cash both are real, but computer debit comes in and cash credit goes out. Stationery purchase 1,000. That is cash transactions, and the 2 account is coming. One is stationery account and cash account. Stationery nominal, cash real. Stationery nominal debit expense. Stationery nominal debit expense. Cash real credit goes out. Cash real credit goes out. Number 6. Purchase made of rupees 20,000. Cash transactions. One is goods account and another is cash account. Both are real. Goods, real debit comes in. Goods, real debit comes in. And cash account, that is also real, credit goes out. Real credit goes out. Number 7, purchase is made of 30,000 from Raman. This is a credit transactions because its name is given from whom you have purchased, and it is not nowhere it is mentioned whether it is a cash transaction or it is a credit transactions. Purchase is made of rupees 30,000 from Raman is credit transaction. One is goods account and there is Raman account. Goods account real and Raman account personal. Goods account real debit comes in. Goods account real debit comes in, and Raman account personal credit giver. Yes, debit the receiver, credit the giver. Number 8, goods of rupees 15,000 sold for on cash. Goods of rupees 15,000 sold on cash for rupees 28,000. See, in these transactions two amounts are given. If two amounts are given, the purchase amount you will not take, sold amount you will take. The meaning is the goods which you purchase for rupees 15,000, the transaction you already passed. Goods purchased 15,000, that you are selling now it is 28,000. So you don't think that you have to pass the two entry. Sold goods of rupees 15,000, goods of rupees 15,000 sold on cash for rupees 28,000. So 28,000 amount we will consider here. That means we will consider here only for sale transactions. Purchase transactions already you have done previously somewhere. So one is goods account and another is cash account. Cash transactions, this is cash comes in and goods goes out. So comes in means debit, goods goes out means credit. You understand. Number 9, the goods of rupees 8,000 sold to Nita for rupees 15,000. Again, the goods of rupees 8,000 sold to Nita for rupees 15,000. Now 8,000 goods you sold at 15,000. So you will consider 15,000, not 8,000, but it is a credit transactions. Previous one was the cash transactions. Now credit transaction, the two account one comes. One is goods account and it is Nita account. And you know the goods going out. So it is credit. And Nita personal is the debit the receiver. So Nila is the not Nita, Nila. Nila is the receiver. Nila receiver debit and goods is going out credit. Goods return to Raman. Raman को आपने goods वापस दिया. क्यों? Raman के पास आपने purchase किया. तो credit transaction one is purchase return account and this is Raman account. And purchase return credit, Raman debit. Keep it in mind. One is purchase return credit and this is Raman debit. Why? Purchase return credit because goods goes out. Similarly, goods return to Nila. नीला को गुड्स रिटर्न किया. गुड्स रिटर्न बाय नीला, सॉरी, गुड्स रिटर्न बाय नीला बिकॉज नीला को आपने गुड्स बेचा था, नीला वापस दे रहा है. सो इट इज कॉल्ड सेल्स रिटर्न. सेल्स रिटर्न इज डेबिट एंड नीला इज क्रेडिट बिकॉज सेल्स रिटर्न इज ऑलवेज डेबिट, परचेज रिटर्न इज ऑलवेज क्रेडिट. कीप इट माइंड. परचेस अकाउंट इज ऑलवेज डेबिट, सेल्स अकाउंट इज ऑलवेज क्रेडिट, but purchase return is credit, sales return is debit, reverse entry. Number 12, paid 500 for carriage. Every one of you know. Paid 500 for carriage. This is called cash transaction. One is carriage account and another is cash account. Carriage is nominal, expense debit, cash is real, goes out credit. Goods of rupees 200 destroyed by fire. Destroyed by fire, you will think, sir, whether it is a transactions or not. It is also considered as transactions, because if you are not considering it as transactions, your accounts will not tally. Goods of rupees 200 destroyed by fire, the two account will come. One, goods destroyed by fire account, and this loss due to fire account. Keep in mind once again. This is different type of transactions. Goods of rupees 200 destroyed by fire, the two account will come credit transactions. One is goods destroyed by fire account, another is loss due to fire account. Goods destroyed by fire account, that transactions optional is there. परचेस अकाउंट को भी आप क्रेडिट कर सकता है, बट गुड्स डिस्ट्रॉयड बाय फायर अकाउंट भी आप क्रेडिट कर सकता है. And loss due to fire, that is loss means nominal account debit, and goods destroyed by fire, goods going out, it is a credit. So goods destroyed by fire credit account, and loss due to fire is debit account. 13, that is 14, commission received of rupees 500, cash transaction, cash account and commission account. Cash comes in debit, commission goes out, sorry, commission income credit, cash debit comes in, and commissions income credit. 200 paid for salary, that is no need to say, every one of you understand. Salary account and cash account, cash transaction. Salary nominal, expense debit, cash real goes out credit. Like that way, which way I explained, in this way, once if you are understanding all these 6 steps, the previous all this video, if you follow and if you understand this all, the next chapter you will not have any difficult. So illustration 4, sorry, question number 4, exercise question number 4 I explain. Question number 5 also you will write in your own idea. If any doubt comes, you will tell me, and all these 5 questions you will write in the fair book. I will check your fair book, and this chapter is over. Next chapter, next video I will teach you the next chapter. Even though if you do not understand, you will tell me. Okay, all the best, bye.